Hello guys, today someone just asked me how one can start making money by trading or investing in the company shares that are listed on the NSE or those company shares that have been listed at the Nairobi Security Exchange. And now in this video, I'm going to take you through a step-by-step procedure on how to do that. Now in this case, I'm going to assume that one, you do not have any account that is going to enable you start trading these shares or invest in the stock exchange market in Kenya. Two, I'm going also to assume that you do not know anything to do with the stock exchange market. Now, in this discussion, we are going to break this whole thing down in four main steps. The first step, we are going to discuss what you need in order to open an account that will enable you to start trading or investing in the stock exchange market. That is one. The second one, we are going to look at how you can pick the right stocks for you to invest and for you to trade them, for you to make money. Then the third one, we are going to look at ways through which one can now make money. You are just trading stocks or investing in stocks, but now how are you going to make that money that you have been hearing people talking about, people making crazy profits in the stock exchange market? And lastly, we are going to delve into the risks that are attached to the stock exchange market. Now let me get started right away. Now the first thing, you want to open an account. Just like if you want to save your money or you want to transfer your money or you want to bank, you need a bank account. The same way you want to trade something like Forex or cryptos, you need some account that you are going to open in various exchanges. Now, when you come to the stock exchange market, you need what we call the CDSC account. That is the Central Depository and Settlement account. This CDSC account is normally opened through a broker, or you can open it in another way. Now there is a number of brokers, and for you to get a full list of these brokers that have been licensed by the CDSC and the CMA and they are being regulated by the Capital Markets Authority of Kenya, you need to go to the Central Depository and Settlement Corporation website. Now, when you go to the Central Depository and Settlement Corporation website, just look for the licensed brokers or licensed stock brokers. From that list, you are going to see all those brokers that have been licensed. It is very, very important for you to go to the Central Depository and Settlement Corporation for this particular list so that you can get the right data. If you do not get the right data, you will not be able to know which brokers are licensed and which ones are not licensed, which ones are being regulated by the Capital Markets Authority and which ones are not being regulated by the Capital Markets Authority. It is very, very important to do that, because if you don't do that, then you are going to be exposed to the risk. Now, once you have identified the right broker that you want to work with, you are going to open the CDSC account. The requirements for opening a CDSC account are very, very accessible. The first one is just your national ID. If you are in Kenya, we need your national ID. You need your KRA PIN certificate. You will need your passport photo, and also there is an account opening form, a CDSC account opening form that will be sent to you by your broker. You fill in that form, then you scan back all the forms, that form plus all the other documents, to that CDSC account broker. Then your account is going to open. When I opened mine in 2019, it took about 3 working days for it to be approved. I do not know how long it takes right now, but I know within 1 week you will be having your account. Now that is the first step. You already have your account. Now the second step, we want to see which are some of the stocks that you are supposed to trade and which are some of the stocks that you're supposed to invest in. Now, when we look at our Kenyan market, the Kenya capital market has been designed in such a way that you can see all those publicly listed companies, and you can also get the informations that are attached to these specific stocks from their respective websites. If you are going for banks, you are going for telco companies, you are going to for energy companies, you are going to manufacturing companies, you may be considering such some companies like KCB Bank, Equity Bank, Stanbic Bank, Bank of Kigali, that is under banking industry. You may also be going to companies like Kenyan or Total, that is under the energy industry or the energy sector. You may also be looking at the manufacturing sector. Now, what it takes for you to choose the correct stock will depend on your investment horizon and your investment goal. Why are you investing? Are you a day trader or you are a long-term investor? Are you interested in getting profit very, very fast, or you are just interested in very, very stable companies that are going to pay you dividends each and every year? Now, those are some of the things that you need to look at. Once you are okay with that, we are moving to the various ways through which you are going to make money in the stock market. And there are two main ways. The first way, which majority of people normally go for, especially those people who want passive income, is what we call the dividend income. The dividend income is that amount of money that a company pays to its shareholders at the end of every financial year based on the amount of profit that it has made. Remember, the payment of the dividend is not guaranteed. Sometimes it may not be paid depending on how the company has performed financially. If the company has performed very, very well financially, it will give the dividend. And also the amount of dividend being given will also depend on the profit that has been made and also the retained earnings or earning that are supposed to be retained by that company. That is the first way, that is through dividend. Then the second one is through capital gains. You have bought your share today, maybe Kenyan share today is around 9 Kenyan shillings. Maybe 2 months later, the price goes up to around 15 shillings. That is a difference of around 6 shillings per share. That is more than 50% profit. That is what we call the capital gain. Now, those are the two main ways. Now, there are some risks that are associated with trading in the stock exchange market. The first one is the capital loss. We have looked at the capital gain and you have seen that it is just an increase in price over time from the price at which you bought that particular stock. Now, the capital loss now is the opposite. You bought Kenyan stock at 9 Kenyan shillings. Then 2 months later, the price is at 5 Kenyan shillings. You have lost 4 Kenyan shillings per share. That is again close to 50% of what you had invested. That is one of the risks. The second risk is that some of the stocks or some of the shares may be suspended from the NSE if they continue to underperform, or if they do not comply with the CMA regulations. So if a company share has been suspended, for example, we saw the Mumias Sugar being suspended. We also saw at some time the Kenya Airways stock was suspended. The Nairobi Business Ventures was suspended at some point. If they are suspended, sometimes they may come back, sometimes they may not come back. If they fail to come back, then you are not going to have anywhere to sell your stock. You are not going to have the ability to sell your stock publicly. Maybe you may only consider private transactions, which in most cases may not favor you. Now, these are some of the things that you need to know. And welcome to the stock exchange market. You can always start taking risk by the amount of money you can afford to lose as you continue doing your research.